Hello and welcome. It is the year end for 2016, and welcome to the Silver Charts channel. We'll take a look at the Dow Jones Industrial Average on multiple time frames: the yearly, quarterly, monthly, weekly, and daily. And I think it's best to note that I'm going to be showing these stocks as far as, or the charts based on the technical patterns that I'm used to. Go through the history of different things where I'll be talking about, well, these different crashes have happened in the past. And I think it's also worth noting that I do think there's a high chance that within either the next year or the next decade or even a little after that, there will be a global fiat currency crisis slash collapse. And I have to think it's best to assume that companies that survive the situation or the pending fiat collapse, that their shares should be worth that and then some in the monetary cycle that happens to follow the fiat currency. And I think that again is worth noting. So a company survives it, you buy a stock today at say $20, and maybe in 20 years you'll sell it for 75, insert noun. And so let's take a look at the first chart, which is the yearly chart up in 2016. That of a little over 2,300 or almost 13.5% after it lost about 2.25% in 2015. Up about 20,000% since 1917 and almost 50,000% since the 1932 lows. So look at the volatility in here compared to every other year since, and well, never anything close. And the trend within here says probably not yet. Of course, maybe if this whole economic failure really comes pounding down, but heck, we've been talking about that since in here, and it's been obviously going in a bull market. Within this 18 average, since getting out of this correctionary phase, the only correctionary cycles within the 18 average band has been the sideways movement in here, which inflation adjusted was like a crash in itself. These things are naturally born or supposed to be going higher when you have a fiat currency that is continuously being inflated. Continue on further. This is the 1987 crash in here. Doesn't look like much of a crash, but that's what it was. And then the dot-com bubble, the 2008 crash, and things have been going up since then as it's had a break of this resistance. Let's move this on to a quarterly time frame, which takes us back to the early 1990s. And when we look at this in here, what's very interesting to know, just a beautiful pattern, depending on how you want to perceive it as, you have this low established, and then you break past this resistance. Now, obviously, that resistance break within this term was that failed move that set this up. But higher high, lower low, that makes another higher high. So is the pattern going to make another lower low? We're going to make a consistent pattern of higher highs and lower lows? No, but I do find that of note. Now, the Fibonacci retracement that I'm using on this quarterly chart has the lows of 6,470 and these highs of 14,200. The 61.8% level, which on the recovery stage within this 18 average band back in 2009, well, it corrected within this point, broke out, found support at this level, and has broken out. So to me, we'll see how likely it is that 23,000 and a hair above is a significant level. And of course, it's got a decent ways to go there, which is another 15 or so percent. Now, my Fibonacci formulas in which I use this, I take the highest price that you're using within it, and you divide it by the lowest price to the exponent or the power of the Fibonacci percentage. So these two that I used was 0.618, which is 61.8%, and then 1.618. And then you take that number and then you multiply it by the lowest number, and that's how Fibonacci can be calculated. So if you're looking for it on whatever market, that is the formula in which I use for Fibonacci. So again, it'll be very interesting to see how this plays out. It's been very choppy when you have the consideration of going below this band and then a little bit above it and then below it, and really not doing any type of trend really until now. Let's move this out until the into the monthly chart, and here's the situation in here of the just consistent bull market where it never goes up much, but it never does go down really either, with support being very good within the 18 average band. And yet here, and here, and here, so many levels. And then more recently, this 18 average band was pierced well below it. It's almost the big scare tactics trying to say, oh, it's the time for the big bear market, because we seen it in 2008. The 2000 stock market crash. There's a lot of fast cycles that have happened, and one major one that has happened, of course. But they, of course, were just scare you out. But what we've seen here is a significant break of resistance after this sideways correction. So that's why we've just had the break to about 20,000. So that 23,000 number that I talk about is not a far-fetched level for where it could go to. So the volume is interesting, to say the least. I'm going to now put this on the weekly chart, because right as this thing has been breaking out, if you take a look at this on the daily chart, look at the last so many years, that you will see that on this move higher, the volume has been interestingly bigger than anywhere lately. But anyway, throwing that part aside, I just think that's worth note. That's really all I want to go for that. I do have near term again Fibonacci, which has the lows of 18.3, or excuse me, 15.3, and then the highs in here. So this high and this low. And the Fibonacci number is in at 20,476. So just something to keep your eye on if it's an interest towards you. But definitely a choppy chart, to say the least, as well. Just it's, yeah, when you have this big move going down here, setting up a level of support, and okay, so support has been established. You come up to this band, you resist the 18 average. Okay, things are going fine. Starting to go lower, but not much lower. Okay, looking like it might get back going again in here. The 18 average band on this way up, well, you know what? It's just riding through it, and it's breaking above it. Hey, maybe this is going to be the failed breakdown that's going to set up a fast move to the upside, is what you'd be thinking within it. Well, resistance is established here. Come back to the band, and here, close to testing it, but not quite, and then back to the band again, and it ultimately breaks through with a fast move, breaking down that key support. Finding support practically where you did before, which is no surprise. See, when you come up here, you're like, okay, what's going to happen? Is it going to find a way of reversing this, thus making this a failed move? Or is it going to find resistance here, then go further lower? Really, those were the two options in play, and we can see that this was indeed that failed move that has thus set up this up move. As it stands right now, well above the 18 average of closes. And it's had about 3 weeks of just a little bit of correctionary movement. So because of that, there's nothing out of hand stating that this thing can't continue with more green candles higher. But I'd be looking for support if it does happen to go lower within this band area, and on that situation, you know that this is a key resistance level. Okay, let's take a look at the final chart, which is the daily chart. And this the trend change is pretty much right here. That's on the election period. Now, it kind of makes sense fundamentally that this happens, at least, especially if you talk to the old me from 2003 and 2006 and 1995, that you have the status quo presidents of every single one of the past being the same every single time, and now someone different is president, a business person. So you would have thought that the stock market would go much higher if someone like Donald Trump becomes president, and technically it has. So that line of thinking makes sense to why you go from this type of movement and all of a sudden it's now towards the upside. Now that's just me thinking on how I would have thought within that time frame, but I know markets don't move on real fundamental analysis, so I'm throwing that completely out. However, within this movement, imagine you're trying to state, okay, it's broken above here. What I want to see happen is resistance established and a move to the 18 average. And you're saying this at 18.3, 18 whatever, that area. Resistance established, move back to the band. It went up a long ways before it corrected to where it has now. So that's what's of interesting note. I've given you the couple key Fibonacci upside notes, both short-term and mid-term, or mid-term, long-term, however you want to look at it. So key support levels of Fibonacci is the 23.6 and the 38.2 on the way down. If this is the top and it goes lower, those key numbers are about 19,470 and about 19,150. Those would be the key numbers that I'd be looking at in, of course, that situation. But the story is the same on a break of this key level. It's going to go higher. Now, it being the Dow, doesn't usually go up like this. It usually goes up surely but slowly. But anyway, thank you for tuning into this year-end video. The next year-end video that will come up will be that on Bitcoin, which should come out later today. Take care.